side, they should be very clear, is their name going to be flashed on the website or is this transaction anonymous? 2, the company they're dealing with, is that a good company? Because if you do not deal with a good company, they could send, in case of default, a wrong person to collect money back. So those are from the borrower perspective too. Otherwise, they are getting the money so they can actually are in a good position. From a lender side, I think what is very important, one has to understand in any product, financial product, it is how the process minimizes the risk rather than does it make the risk zero. Even we all think that putting money in a bank account has zero risk. Actually, it does not have a zero risk. The probability is low because banks don't fail. But hasn't banks failed? The banks have failed. And in that scenario, your money is not safe, but the probability is low. So how is this lending platform, which you're becoming a member of, how are they reducing risk? So coming specifically to Monexo or any generally, 1, would you like to deal with somebody who is a bad element like a terrorist? If there's one terrorist involved in this platform, then this whole platform is tainted in a way. So are they having a good AML KYC policies? 2, that's why we ask documents. We need to know that. 2, do they have technology which is secure? We have seen where scams happen, customers take money away or they steal your personal data and then they pose you as a borrower somewhere else. So you have to see whether the security on the online world is equivalent to a bank. So is it HTTPS? Is there a token coming back to you? Those kind of things. 3, are they just listing anybody as a borrower or they're really screening them? If I listed anybody on the platform or any marketplace listed them, the money may not come back. Because there is always an element that some people may not have the ability to pay back, but they have the ability to borrow. So is there a policy framework which this company says and they abide by it? 4th is, do you have to lend all your money to one person? Then your chance of default is very high because that one person is your life. But if you can lend out in small chunks, then even if you lend out to 50, 60 people, 2 people don't pay back, your risk is very low. So these are 4 or 5 things which I think is very important from a marketplace to provide to the lenders to bring down the risk. And from a borrower perspective, I think if they think, okay, let me take money and I'll run away, that's not possible. There's a law, irrespective whether P2P lending laws are there or not. There are laws around borrowers and their liabilities and their duties, which should be followed. The first company to go off the block was called Zopa in 2005. And then it was moved into US by 2 companies called Prosper and Lending Club in 2006. Surely the US regulators, based on the structure taken by Prosper and Lending Club, regulated it in 2007 and 8. And since then, that's the structure for US. Very different structure. And UK government actually waited, understood this whole platform, as well as started lending on these platforms, £100 million every year from 2011 onwards. And then they regulated the industry in 2014. So almost for a decade, it was not regulated. However, they came out with 3 broad principles. 1, peer-to-peer lending companies have to screen borrowers. 2, they cannot hold the money of the lenders in their own books. That has a risk. Because if you hold the money in your own books, and for whatever reason, the company shuts down, that money can be attached towards the liquidators of the company. That also gives safety reason for the lender that what happens to my money if Mukesh Bhubna wants to run away? He can't. So that's called bankruptcy remoteness. 3rd, it said that these companies have to have self-insurance, i.e. if the loan defaults up to a certain amount, they have to cover up. So surely as the companies are growing out there rapidly, they can create that self-insurance policies themselves. But what we have done is we've partnered with the AIG because we are young. Today in UK, banks have to refer every declined case to a peer-to-peer lending company. That's part of the regulation. The banks cannot just say, sorry, you're not eligible. You can say, I don't want to do business, but there are partners, peer-to-peer lending companies, which we have partnered. Please go and try. Because credit is very important for the wheel of the economy to go forward. If there was no mortgage loan available, I think we all would be saving for 3 generations before we could buy a house. And we know if there's no mortgage, the construction industry will die. Similarly, for small, medium enterprises, credit is very important for them to do business. And Hong Kong is a huge SME business here. And the World Bank talks about $33 billion gap on credit here for small medium enterprises. And that's what we are focusing on, how we can solve that. Firstly, the way we process, completely online, transparently, and giving complete comfort. I don't see any peer-to-peer platform which has a partnership with a third-party administrator. If they keep money, then borrowers and lenders have a risk that the borrowers can pay to them, but they may not pay to the lenders, and then the lenders come after them. Second is our focus on this segment. We're not in the game of helping people buy mobile phones. We're in the game of helping people run better businesses and improve their lives. Because SMEs are the wheel which keeps the economy humming. Even in Hong Kong, there are 300,000 SMEs as per the government data, as well as they employ 1 million people.